Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Welcome everyone to the Midweek Software Strategy Session. I am Steve Fettel, the CMA, your risk manager. Let's do a quick check while I make the screen large. If you guys could type something in the window, let me know that you can see the screen okay, so that I'm not talking to myself, which was kind of comical in the beginning. This was like probably 7 or 8 years ago when I used to do WebEx presentations. Sometimes I'd be talking to myself for like 3 minutes and everybody'd be like, "Hey, I can't hear." So I've gotten smarter in my old age. But in any case, welcome. And let's go through the Forex calendar real quick. This is going to be a short, sweet presentation today. I have a lot going on, as you guys can see. I'm running client portfolios. We've got to make a bunch of changes and do some block trading in client accounts. I do not have a lot of time to go through this today, but I've been talking about this like a broken record for the last 3 or 4 months now. If you're welcome to the presentation, if you're new, I do these calls twice a week. Try to do 10 a.m. at least 5 or 6 minutes after, on both Tuesday and Saturday. Talk a little more expanded on Saturday as far as the strategy for upcoming week. And if you haven't already heard or listened to any of the recordings, most of what I've been talking about has just been the volatility that we've seen. Now, obviously, this is, and I'm going to go to my Twitter before I get into this Forex Factory. If you have not set up a Twitter account, I highly suggest it, not for all the ridiculous, useless banter, but from, let's see if I can paste this. Why am I looking at Episcopal Academy? That's crazy. There we go. Let's do just copy. There we go. I'll paste this in the room if you guys need a link. The reason I've been doing this, pushing this more and more, is that with about half the people that I follow, a lot of them, like Kyle Bass, as you can see here, and these guys are absolute experts in what they do. Most recently, a lot of Kyle, when he sees it, runs a big hedge fund in Florida. And this gentleman here, Alex, who's very smart, have been posting a lot related to what's been going on in China. So if this is news to you, I would Google if you want a deeper dive, or you could jump into the AP Live, jump into AP Social, look at my group. You can see I put a lot of posts on here. You know, and a lot of it is really just posting links to see what's going on from a larger standpoint. But essentially, a lot of super leveraged real estate developers in Communist Party China are falling apart, and many of them have lost 70–80%. And keep in mind, real estate's a huge chunk of the GDP of China, and it is really reverberating through the whole industry and lots of different stuff. It's spilled over into the markets. So just to give you a feel for how heavy this drop was yesterday in equities, and this is not really an equities presentation, but risk can manifest itself in all kinds of different forms. And I think it's really important to understand that risks can run through different markets and cause problems in other markets, right? So we saw this with the currency contagions in 2015. We saw it certainly with the pandemic in the first quarter of 2020. We saw it in the financial crisis of a huge chunk of latter part of 2007 through 2008. So all those periods of time, which we certainly could see some of that volatility coming back, we absolutely did yesterday. So just from a standpoint of forget about what markets we're looking at, okay? This could be an individual stock, could be a commodity, could be a currency. Anytime you have a huge gap down on a large volume, as you can see here in the S&P 500, you really want to see the next day. You want to see us not necessarily come out of a V shape on it, but you want to at least see some progress towards higher highs, lower highs, or I'm sorry, higher lows and higher highs than the previous day, right? And that's the case with almost anything. It doesn't necessarily have to be a daily candle that you see here. It can be a 15-minute. The point is when you have a big gap down or some huge gap up, you want the if you're bullish, you want to see this reverse and try and at least get out of yesterday's high, which we've been unable to do, right? So the S&P is hanging on by a thread. It may wind up dropping throughout the day. Not a surprise because, leverage is unwinding, positions are unwinding. There's a lot of funds that are really levered up. And as we called it back in the day, the bat phone's ringing from margin guys in New York telling you either start liquidating or we're going to do it for you. And that's because of Reg T and a lot of Fed regulations in terms of leverage you can have overnight on individual securities, of which a lot of that's thrown out for institutions, which seems a bit ridiculous, right? So the leverage and what's going on in terms of equity exposure is dramatically higher than it was in 2008. And this leads to potential problems in terms of spilling over into everything, right? So usually, right, I always joke I could be wrong. Usually a rally, and you have like a big gap down on Monday, turnaround Tuesday is what they call it. We're not seeing it. So for now, and obviously market's halfway through its session, we could have some further weakness develop. And I don't know that that would necessarily be good for any currency with the exception of the DXY. And this is why I'm dovetailing into this conversation, sort of leading you in. And, one could certainly look at an analysis of bonds. Surprisingly enough, not too much craziness in the credit markets. Like you're just looking at daily charts of, the U.S. bond markets. You think we'd be, blasting out of this and starting to move around, whether it's a 2-year or all the way to a 30-year bond, right? Which we're not seeing it. But the volatility's definitely spilled over into equities. So, we're going to look at the DXY, but when you have periods of time like this, you always want to jump to the VIX, okay? And this is a measure of volatility. Now, it's come back down under its long-term, this is daily chart, it's come back down under its long-term channel, if you will, that it's been trading sideways in for quite some time. But notice we hit pretty high level yesterday. And this will certainly make institutional traders, especially ones with large and more so in the leveraged position category, sort of sit up and take note, oh God, right? And we came back down, but we want to keep a close eye on this. You keep it drop down to a 4-hour in this analysis and look to see, will we be back above some of those call them sideways trend lines, if you will, right? Or just a balance period we've been in, which has typically been hovering right around 20, right? Not a big deal. If you were to look at this from a long-term perspective, you got to go out to a monthly to see this. Let's reset the scale. You could see, where this was just Armageddon levels, right? Which is anything up around 100. But just the volatility was ridiculous. And, some of the contagion I mentioned around 15, it's just some Brexit issues. And then obviously with the 18 correction, the pandemic, obviously is the big one, right? This is the big March. So just know kind of historically where it's been, what ranges you want to be in. And then I essentially just moved to the DXY, which we'll do right now. Daily. Put it in context of last 2 years, its moves. But again, this whole area of still posing a really solid resistance right around 93.5. The high side of this resistance, if we were to get up there, which we haven't seen in a long time, in over a year, is 94.5. But the reason I sort of move into the discussions of the dollar is because typically what happens in global nuttiness, right, or just markets going bananas, you will usually see a flight to quality, right? Bonds, the credit markets, and then in currency land, typically it's a flight to the DXY. Now, that's just so much different cross currents going on the globe right now. There's problems in Australia. There's problems, there's all kinds of protests everywhere. And, I'm not bringing it up to create a mania or any of my posts to create a mania, but it is to grab thy attention. And honestly, I just personally feel that I'm not doing the best job I can for AP subscribers unless I can continue to get you guys to that whole yelling from the mountaintop theme. Because frankly, right now, I think there's too many subscribers caught up in the minutia of whatever's going on, and some of them don't have their trading system straightened out of the MT4 platform, dialed in with whatever AE's trading. But I think it is just imperative that all the leaders that on our board meeting every week, there's about essentially 20 of us globally that have been hand selected to sort of, spread the word of what's going on. So how do I know this? How to sort of the proving ground of this is all I can do is go into these chat rooms and Telegram. And at which I've actually posted stuff for, and I purposely didn't put anything in Telegram other than a teaser because I'm trying to get everybody migrated to the AP platform. So from a perspective of risk management, outside everything you guys do for your teams that you run, I think it is absolutely critical that you get them migrated over to that platform, because there's stuff being posted by me and some of the other trading educators, Hawkeye guys, Arrow, that you're not seeing in Telegram or will not be seeing in Telegram going forward. So I think it's wise to get everybody migrated over, and at the very least have them watching these calls, because I've already been pinged up a whole bunch of times just in the last couple of days by people that were trading S&P or Dow 30 on MT4 with whatever software, or doing manual trades themselves or a combo, that just got taken huge hits. And then I'll ask them, quite frankly, did you hear any of my calls last week? Oh no, I didn't. I can't help you guys if you're not paying attention to the big macro view. So I'll get off my soapbox. That's the analysis for DXY. Let's take a quick look at the euro. Obviously the opposite of DXY, right? So we're hanging on the edge of the cliff. I honestly think at some point we've got to test 94.50 if this contagion from these banks and or real estate companies in China starts to send out bigger waves across developed markets. Remember, China is still considered an emerging market from a capital perspective, right? Even though they're very large, they're not part of the developed markets discussion yet. I think Xi Jinping would probably have something to say about that, but from the purposes of analysis standpoint, as a market, they're still considered emerging markets. So paying attention to EEM, right? This is just an ETF. It's based on the BRIC countries, Brazil, Russia, India, China. It's down near the bottom of its movements, right? This is no surprise. A lot of this is because Chinese equities have been getting really clobbered, especially the ones that have been sensitive to all the government's meddling, right? So just keep close attention on if you have emerging markets allocations in any of your 401ks or IRAs, just know that we're hanging on by a thread here as far as this. Many have said, including Alex, let's get this really long Italian name, or J. Kyle Bass, guy's actually one of my favorite guys because he's a very generous billionaire as far as just talking about what's going on. The problem I have in terms of research is that I have two complete ends of the spectrum right now. So you'll have top guys out there talking up their book. They're saying everything's good in China. It's not going to, and so whenever you hear guys like BlackRock or any of the big institutions that have huge holdings over there from an American or some sort of European asset manager, right? They're just talking up their book. Whereas if you pay attention to people that have no holdings in China or aren't short the market, like Kyle Bass, you can get a much more transparent opinion of what's going on. So, but the problem I'm having right now from the perspective of helping you guys out is knowing what markets are going to be affected by this, if any. It's tough to call, so I'll continue to work on it. Note from a Forex Factory standpoint that we have the FOMC stuff tomorrow, which I think is just going to continue to add volatility. And you're going to have also Fed Chair speaking. I don't know if he's taking any Q&A on Friday. That's always the sort of clutch thing you got to pay attention to. But do keep in mind that, a lot of people have always asked me questions historically on this, hawkish is, versus dovish, right? We've been in a hawkish mode for freaking 12 years, as far as sprinkling cash down upon primary dealer accounts globally. He's getting a lot of pressure. Some Federal Reserve chairs did some crazy shit with their side trading, and which I really think they should look closer into. They should open up some sort of banking subcommittee on that. Have all the idiots in Washington trying to figure out if these guys were trading their own stocks. That's not a good thing, I got to tell you. That's a total conflict of interest, in my opinion. But do note he is speaking on Friday. We have a bunch of stuff on Thursday. Ideally, if I could have had my way globally, wave a wand over all subscribers, I probably would have had the vast majority of the newest traders not trade at all this week. Spend most of their time just paying attention, obviously, to what's going on and why, and then continuing to build their education through an absolute mass load of videos that we have to offer. Yeah, I would say that if you have problems, and the other thing I've noticed is way too many people are really trying to, and look, I get it. You guys want a community. I do understand that. But there is just a lot of bandwidth and a lot of brain power, in my opinion, being used up in a lot of these chat rooms. Just going on and on about stuff that's just truly not going to help. And I can't say that for everything. I mean, some of the content's good, but you just have a couple of individuals just continue to flex their ego in whatever form, and I'm not talking about the educators. So from the standpoint of risk, again, there is risk in paying attention to way too much noise that is affecting your ability to trade, right? It can be just as detrimental as your own loss record or your own win record. So just recognize you may be heading down that path of poor behavior, and I just don't want it to lead to any destructive nature, which is very, very easy to get caught up in as a trader. Pay attention to the stuff that's important, right? All right, GBP CAD, and then I'm out of here. Let's take a look at that currency. And by the way, if you want an analysis of any of these others, I went through the vast majorities on Saturday. Let's take a look at the NEO currency. So, again, daily chart perspective, right? We're still stuck in the window. So that makes you believe, well, what should I look at in GBP crossland, right? What's been a little crazier than many? This is certainly one of them. I think a lot of this is related to China, okay? Whereas if you take a look at GBP USD, maybe there's some nervous surrounding the edge of the cliff, right? Because we're at it. Now, that's not a surprise if you spend enough time looking at the DXY, because, it, to me, looks like it wants to rally to that 94.5 area, which is right up here where this dotted line is. It seems like this is the magnet. And we get past this area, it's probably going to get there pretty quick, because there's just pockets up there. And I talk a lot about the auctioning process. Once it gets through a particular zone of support or resistance, will in many cases just zipper up to the next area. Why? Because there's so much pent up whatever stops, people caught off guard, and even from some of the biggest institutions, that these guys got these raging egos on these trading desks, thinking, dollar's going down. It's more likely it's going to be long term. But anytime you have any global problems, money typically wants to go to some of the safest places on the planet, and that's some of the strongest bonds on the planet and or the strongest currency, even though we may be, as a country, just as damn near in debt as everybody else. It's just sort of the lesser of all the evils, right? But ultimately, I think long term, this thing's going down. So with that knowledge, we can move on to GBP and see that the problem I have with this is there's a lot of cross currents going on in Canada. So when you look at the price action on this chart, I don't know that you can necessarily say to yourself, well, geez, if the pound's about to break down in relation to the dollar, right? How can this thing rally? Maybe I'm wrong. Maybe it does. It's a very, very clear level between this zone here and the upper portion of this zone, which may be a little lower, right around this spot 7,600-ish area, up to the next area, which is 1,700 pips away. Is that right? So you just want to pay attention to that kind of move, because that could happen pretty quickly. And this is one of those cases where we spent so much time under this area, damn near April of 21. What's that, 6 months? No, a little less. June, July, August. Yeah, almost 6 months. That if we blast beyond this, we're probably going up to a much stronger area up here. See this yellow line? And we may just zip a right up there. Ideally, and statistically, especially from like a win rate historical perspective, and any kind of break like that, I don't want to be stepping in front of the freight train. I'd rather be riding the caboose, right? I sound like a broken record in that department. I could probably say it 100 more times in order for it truly to sink into a lot of our subscribers, which is essentially my role, right? That's why you see like 1,000 Geico commercials on TV. I always thought it was the craziest thing, and this is sort of human behavior, but when I got out of Xavier in Cincinnati, and I was in a finance degree, I had gotten a shot in my first job to work with a graphic design agency. I was dating the owner's daughter at the time, and he gave me a job as just some young punk out of college, and I got to meet with a lot of Procter and Gamble, and they at the time were kings on the globe in terms of brand management. And all the stuff they taught me about product sales and global brand, I should say branding, is that in many cases from a advertising perspective, you have to push the message 12 to 15 times for the average person for it to sink in, which always blew me away, right? That's like somebody having to tell you 12 to 15 times the same thing in order for you to learn it. I could never, I'm going to learn it one time, you told me. I just couldn't grasp that. But that's why you just see just endless amounts of commercials in certain categories. And Geico always comes to mind, right? Why? Because they pounded it into my head, even though their price insurance for everything else in comparison completely sucks to the marketplace. So gold, let's just look at the spot market. As the dollar settles out, I think really gold wants to rally, but anytime you have a spike in currencies, it just hits the metals. I don't know if you guys have seen silver, but I mean, this thing's just absolutely cratered. So, I mean, looking on a longer term chart, if you trade gold, you want to pay attention to the ones in the metal space outside of gold. Palladium and platinum and silver have gotten clobbered. So you have the children, if you will, in the precious metal space to the big grandparent adult in gold not acting well. So just note that. Let's take a look at crypto. No surprise, we had this flash down yesterday. Again, just liquidation hits this space. And realistically, it bounced off of a long-term line. Yes, no. This morning it bounced off of a long-term moving average, this yellow line here. Highlighted. One thing I do hate about trading, but you can never get the highlights to just highlight the line. But this yellow line right here, it seems to me this 37,300-ish area, this is the whole zone that really has to hold. for this to continue to go higher. If it goes through this, more likely it's going through this, it's going down to 20K. So if you're long an inordinate amount of Bitcoin at a much higher price, you want to be really aware of what I just said. Um, one of the guys in the room just said Canada had elections. Yeah, I mean, it's, you know, a lot of our developers, God love these guys. They've turned off a lot of these Canadian pairs a while ago. They just haven't acted well. And there's always going to be times when almost everything you trade is just not acting well. And that's the beauty of currencies. Go find another one, right? Or it certainly argues for having diversification in terms of what the systems are trading for you in currency land, right? So if you're just using NEO, you know, that's like just trading NVIDIA around, right? Stock's done fabulously well. It's actually one of my biggest home runs of the long term. But there's periods of time over the last 2 decades I've been trading it that I've just gotten absolutely smacked on it and given up a bunch of gains, right? So you move to other stuff that have that are acting better. So it's a tough thing. What else do I want to talk about? Oil, no surprise. I'm really not getting any reads out of this from anything. That's why I rarely ever talk about it. I don't trade this. This is called the Widowmaker for a reason. Yeah, let's just leave it at that. I think that's pretty much covered it. I'll continue to retweet some of the best stuff related to risk, and you know, if you guys are into Twitter, if you're not, just look at you know, AP. I'll try and post, you know, the serious stuff that shows up inside the platform. Do keep in mind that this is an example of an account that's been trading Flash. It's actually done really well. There are a couple of others. This is with conservative basic settings. And this software has a broader line of currencies it trades, more than NEO, less than Variable. Okay. And it's typically stuff tied to USD, but the win rates, it takes a lot more longs than shorts in some cases. But I mean, the trades on this thing is just, I mean, the win rates and the profit factors on this have just been excellent. So again, a nice product. You know, it's just like anything else. It's going to take, these guys are Israeli developers. It's going to take them a while to get this integrated. I hope I'm wrong and it can happen in 2 weeks, but you know, I've been telling everybody, and I really haven't paid a ton of attention to it. So our developers and or our internal team, along with these guys, the Flash guys, Yakir is his name, are, you know, just trying to get it integrated. These guys have a ton of clients in Israel, at least from my understanding, that have been trading this for more than 2 years. The only problem I've had with this is they've moved around so much to different brokers. There's like no long-term track record from like the same account. You just got to piece some of these together. But from what I've seen, and I am probably one of the toughest critics at this entire company on new product, because you know, I really go at these guys quite hard on these calls. Probably are not get the best love from them, but it's really just to shake the trees, shake the weeds, you know, see as much stuff as we can get out of there. Cool. All right. Everybody have a great week, and spread the word. Get everybody on AP. It should be your goal to tell 10 people a day that you know haven't migrated over the platform and that are still hoping I'll post something in the AP Market Watch and Telegram. Not doing it anymore. You guys have a great week. I will see you Saturday.